Good morning, everybody, and welcome to TheoTrade chat. It's Don Kaufman here. Oh, it is November 10th. I almost said 11th, but it's November 10th, 2025. It's Movember. Is it Movember? I'm not. I couldn't grow a beard if I wanted to. I don't really want to, but I don't think I'm not right for that. I'm not right for it. Yeah, I am enjoying as well hearing about how much snow there is in Chicago. So this is the time of the year where you all suffer, and it's going to be, I think, 80 something today here in Phoenix. I am going to head up to Flagstaff though later this week, so I'll be in the 20s and stuff. It's going to be cold. S&Ps this morning with 90 seconds to go to the cash open are up some 62 handles. We're ripping. Actually, the reality is we're not ripping as much as you might think. The expected move for today, $56. So we have $56 expected move on the day. We're just north of that right now. So I'm just going to tell you right off the bat, there's $123 expected move for the entire week. You're already halfway home for the movement of the entire week. I don't know. I have reservations about this. Look, volatility is definitely off. That's a very bullish sign. It's a very, very bullish sign. Everywhere you look, there's a bid back to the marketplace. But the reason I am suspect of this move, okay, just for a second, it's still like the rotation game. Like, we're going to talk about this after the cash open, but like, look at stuff like Walmart. Why is Walmart down? Okay, everybody's going to get their snap cards. Walmart's going to make a friggin' fortune on this. So you learn very quickly. There's just no, like, you just go to Walmart and be like, okay, so there's absolutely no fundamental reason that we're up. Okay, is there? Can you give me one? Like a true fundamental like reasoning over here. You got energy. It kind of opening like a little flat, but the financials, they're up, but nominally. Nominally. Let's come to today's cash open. It's all about AI. So right out of the gate this morning, as I said, it's all about AI. It's still the ridiculous rotation game. You need only look at the advanced decline line. Would you think this thing was going to be popping to the upside? The irony of today's rally is that it really has nothing to do. When you start looking at the tape, does it have anything to do with the government reopening? Okay, I just don't see it. It's reopening, snap cards. Walmart's down. Target's got a little bit of a bid under it. There's not a lot of action in products, I think, that would be, benefiting from this. And if you take a look at stuff like XLV, we'll go into United Healthcare. I'm surprised that XLV is even like flat this morning, but UNH, okay, UNH is down about $3. I expected XLV to be down a little bit. It's obviously not. XLV is the healthcare ETF. What are you new? Anyway, yeah, it is interesting. Okay. It is interesting on this particular front because we're flying right now, and just keep in mind it is 100%, okay, a AI driven kind of technical move to the marketplace, and I'm telling you that right off the bat. It's enough to crush vol. Even the bond market kind of came back a little bit in here, but this is quite pleasant for the positions that I am presently in. In terms of a rally, the areas that I am actually in positions is XLF, okay, which right now it's not really moving against me. It's up 24 cents. Okay, Starbucks, which is basically flat into the open and selling off a little bit. That is the reason that I was going through in detail here. Okay, exactly what sectors are higher and what sectors are lower, because what you have, once again, it's a bid back under Nvidia. It's a bid back, okay, under Broadcom, Tesla. There's your entire marketplace right there. A little bit of a bid back under Amazon. Okay, I had to go to an Apple store yesterday. So kid had a computer issue, so I go to an Apple store yesterday. Holy crap, was that packed? It's ridiculous, you know. Even my wife was giving me crap. She's like, "Do you like to short Apple?" And I'm just like, "Just shut up right now. Just shut up. You don't talk about my shorts, okay? Don't you talk about my shorts, especially when I'm spending money at Apple." Yeah, I went to an Apple store on a Sunday, like late afternoon. It was like 3:30, okay, 4. I was thinking like nobody'd be there. It was crazy. Okay, it's absolutely crazy. Um, but this move this morning is brought to you by tech. So you can sit here and you can talk to me all about, the government shutdown and the reopening, but I don't know. Does the government reopening have everything to do with tech? Because that's the only thing that's carrying this marketplace right now. The advanced decline line has actually gotten marginally better. The ticks this morning, you note that I didn't even bring them up because they just haven't been doing any justice. And again, I built, this tick study down here, which is, cumulative quantics and comparative quantics, and I'm not using it, okay, extensively right now because it's all tech all the time, and you need only look at the Nasdaq futures to see that obviously the Nasdaq is up 1.6%, the S&Ps are up 1%, but we're halfway home to the upper edge of the expected move. The market has been open for like a whopping 3 minutes. You have to look for considerable two-sided trade, although I don't see it reflected just yet in volatility. We'll watch volatility throughout the course of the morning. By the way, the volatility I really want to look at is going to be out here in about 37 days. Okay. So I'm stating that right, okay, off the bat today. Look for some two-sided trade to actually appear as the day progresses. It doesn't mean that I think we're going to sell off. I want to be very clear about that. It doesn't mean I think we're going to sell off. I just think we're going to get some movement, if you will, back to where like the daily expected move happens to be, which is at a $56 move. I'll kind of script that one in a few minutes. Nevertheless, okay, right out of the gate, I want to look at NVIDIA's order flow. And I'm going to tell you exactly why. Okay, the move that you're seeing on the screen right now, okay, in the pre-market, and this is where, okay, I have argued consistently, okay, that the pre-market trade lately hasn't meant crap, okay, and I want to be just completely, all right, upfront about what I'm saying on that front. You have a bid under the marketplace. Now, that bid brought with it, over 250,000 contracts in overnight trade. It's pretty good, okay? But nothing matters lately until it's substantiated by order flow. And what does that order flow this morning look like? And we're going to open up NVIDIA. And the reason I'm opening up NVIDIA, I think it's kind of the mainstay behind this marketplace, right? Okay, you can talk all you want. Look at the rally. Look at the rally. How about you have the biggest company in the world and it's up almost 4%? Is that good enough for you? Okay, you want to know where your rally is coming from. That's where your rally is coming from. And there's a few others that are not far behind it. Okay, but don't tell me that it's Tesla because it's 1%. Broadcom's got some decent market capitalization. I'll give you that. A little bit of help from Google, a little bit of help from Amazon, but people, okay, this is NVIDIA's marketplace today. And everybody else, okay, is just living in it, period. Okay, there's not going to be an argument about that because the amount of market cap that crap is actually moving. You're moving 4%, okay, but and again, if you look, it's almost a $7 move, okay, $7 move on, let's just round it to 25 billion. Okay, so if you kind of want to know market cap, take the $7, multiply it by like 25, obviously comes to what? Okay, you're looking right now at just shockingly large, almost $200 billion in market cap. Okay, and kind of round a little bit. It's just under $200 billion of market cap is moving in NVIDIA alone. Okay, and you wonder like, oh yeah, how come the market's up? Well, in this case, it's closer to about $175 billion in market cap. That's actually pulling the marketplace higher. So let's look and see if the order flow in here substantiates that, because it's all well and good to be talking about it in the pre-market. Oh, the pre-market, the S&Ps are up really big, okay, and they're running right now. What's the order flow look like? Okay, the order flow is unequivocally and decisively positive this morning. Traded at the ask or above is definitely outpacing traded at the bid or below. Okay. We'll see how long that continues. But okay, there's a big, we've seen much higher numbers than this. This is not like, if you will, this is not like what I would term like catastrophically large volume. It could actually pick up a little bit, but net, okay, this is why your marketplace is going to be sustained for at least the time being. The order flow in here is definitely deep enough. Okay, what's going on? Okay, they're buying calls. They're buying calls. Who's they? Okay, everybody from retail to proprietary trading firms to market making firms. Okay, the market making firms are obviously reacting to this by buying up stock. Okay, and it's not though at an epic proportion like it had been. And how do I know it's not epic? Because I'm looking over here at the sizzle index. That's today's option volume versus the previous 5 trading sessions. It's early in the day. It's very difficult to justify sizzle this early in the day. You're 8 minutes into a trading session, but the volume, okay, is not actually pacing, but normal in here. So this is, kind of keep your head in the game situation for early trade. And it's rare that I get to dig in this deeply, okay, but it's obvious that there's like one underlying running the marketplace today. We could bring up Google. Google is kind of a crap fest to assess in terms of options order flow. And the reason it's a crap fest is because Google is broken into Google L and Goog. Google L usually trades double the options that Goog does. So again, if you're an options geek, you would look at Google L. Google L, there's almost no order flow in here. Like it sucks, okay? But it doesn't take much to substantiate that. Now, let's back away from some of the order flow real quick. By the way, I would not at all be surprised to see NVIDIA have a couple of scary moments in here as well. As I said to you, the order flow, okay, it's there, but it's not massive. I'm moving my screen around over here. I'm screwing things up, okay? Screwing it all up. So the order flow is there, okay? But again, it's just not like what I would call catastrophically large order flow like you would expect for such a bang in the marketplace today. I mean, look, you're looking at a NASDAQ that's almost a full 2%. And that, people, that is important. So switching gears for a second. VIX, volatility. Volatility, okay? It's a decent sized contraction. It's not massive yet. The day is young. The volatility futures, this one is actually more significant. So in the volatility futures, and just bear with me here for a second, I'm going to pull up the VX. Okay, in this case, we're going to use the VX Z25, the VX Z25. We're going to look at the chart on the Z25. I'll show you exactly why. Okay, this is a very bullish sign for the marketplace right now. It doesn't matter, okay, what, right now for a second, it doesn't matter what the order flow is in here. The most bullish sign on your screen, okay, anywhere on the screen, it's not even NVIDIA, it's actually the volatility futures. And I'm going to tell you exactly why. The volatility futures, okay, and this volatility future is, it's got a little bit more time, okay, under its belt. It's got 37 days. So it's harder to move this volatility future. And this one, okay, is actually kind of confirming that bullish move, okay, more than anything, because it has dropped under, okay, under, again, some very, very key levels, okay, to be watched in here. So about 19.5, and it's actually under that right now, which I'm going to tell you, like, surprised me, because there's a whole lot of trading sessions where volatility was very, very elevated. Obviously, volatility kind of reverted back just a little bit on Friday. So here we are sitting with a marketplace that's running a bit. And there's some underlyings like involved in here, but like, look, for example, and again, bring you the energy sector. We're seeing like rotations. It just, this crap doesn't stop. Okay. This is why I said, like, people are like, the government's reopening. Okay. If that made any sense whatsoever, the government reopening, okay, is going to be positive for stocks. You tell me why Walmart's down. I'd love a good reason for that one. Okay. Why is energy down? Wouldn't people have a little bit more money? Maybe the government's reopening. People are going to be able to pay their bills. Why is energy down? Okay. Why is Walmart down? Snap cards are going to go crazy. Okay. They're going to run up billions of dollars. okay, in the next what? Probably going to take about 3-4 days before they actually reload those snap cards, maybe even more. And that's even after this bill passes. But you can't come up with any good reason for it because there isn't, right? This rally has nothing to do with whatever you're thinking the headline happens to be. The bottom line, okay, is this rally has to do with like AI, okay, is back on the pony. That's it, okay. It's the AI pony, and why that has to do with government reopening, okay, there's more funds probably, headed their way. Nothing in the marketplace right now matters other than AI. Yes, we have trades in the financials. Yeah, I got trades over in Starbucks, which by the way, Starbucks is actually coming in a little bit. It's good. But when you're talking about the market as a whole, okay, and I'm referencing the S&Ps at this point, the only thing that's going to drive S&Ps at this point is going to be this AI trade. And that is the driving force behind what you're seeing effectively today. And again, I'm sure that every major media channel has look at the marketplace and its reaction to the government reopening. Okay. Well, apparently the government's going to be giving 100% of that money over to tech because that's the only thing really rallying in here. You can even make the argument, like take a look at the financials this morning. The S&Ps are up, okay, 1.15%. And the financials, okay, they're up 0.45%. Okay, they're sputtering along over here. In fact, these look like they're about to reverse on the trading session. So there's some defection in the ranks. We're nowhere near a correlated product either. This is actually much more wild than I kind of expected it. I really thought this morning when I saw the futures up, when I woke up, the futures were up, like 62 handles. I literally looked at the futures and thought to myself, I'm like, holy crap, we're going to go to full correlation. Like I thought to myself, like this morning that this would be correlated. It's anything but correlated. This is a total crap fest of an upside move. And it's, again, if you're still concerned about markets and still concerned about the idea of an AI bubble, okay, now you should be more concerned because nothing else is really substantiating movement other than that trade. And volatility right now seems to be buying into it like hook, line, and sinker. And that's exactly what I was trying to show you. We're going to watch this really carefully because it's not always how it opens. It's how this price action is going to function throughout the course of the day. By the way, this is kind of a trade I love to do, like an XSP. I want to look. 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 This is a big gap to the upside. I love taking zero DTE trades like this. Come on, you need damn market. 81, 81.76, $5 widespread. $5 widespread for like 99 cents. I could do that. I could do that. Just I'll explain it afterwards. I want to do these things. Okay. You don't have to do these things, but I want to. I'm not going to fill over here, you little bastards. Okay. Stop moving the market, you little bastards. By the way, that's a technical term. It's a professional term. It's called little bastards. Stop moving the market. There you go. Okay. Which little bastards? I don't know. All of them. So I just bought a $5 widespread for $1.04. Here, I'll copy it and post it into the chat. This is exclusively, okay, this is an intraday trade. Today, people, Junior, I had to get at least one line in over there that wasn't from like Seinfeld. Some of the conversation somebody the other day is like, hey, you got to pick up, colloquialisms that are from like, what, this century maybe. Okay, is that where you're going with this? Anyway, I bought a $5 widespread. Let me explain you why I bought a $5 widespread. Okay, I bought a $5 widespread simply because the S&Ps are up 80, and I love the risk reward on this early in the week. That's it. Okay, I didn't put a lot of thought into this. Okay, I literally just fired at will. I had really good intraday trades last week. We had a lot of two-sided trade last week, and I wanted to take a couple more shots this week. By the way, some of the intraday trades that I did last week, the hell did I trade last week? I think one of them was actually like in Microsoft. I just can't even remember. Okay, I traded a lot last week, a lot. You know what I always get confused when I trade a lot okay? I'll just go back 7 days. I traded a lot in a lot of different accounts, but it's all of the some of the earnings flies and so forth. Okay. Things got crazy. Okay. Things got crazy. Oh yeah. I would did Apple. Apple was a good trade. Okay. Anybody do the Apple scalp? Okay. Apple was a good trade. It's $1.60. I was out for $3. Um, there were a few other trades. That was actually even the week before. Oh, you know what? I was also trading in Tasty. Tasty. Okay. My problem, I'm trading on multiple platforms and it's very confusing. Anyway, in the XSP, okay, this thing couldn't be more straightforward. First of all, what is the XSP? The XSP, the only reason I'm trading in the XSP is because some of our clientele at one point sleep behind the wheel, pooch in the spiders. Yes, that's another professional term. And they didn't realize there was like a late day sell-off, and this was a while ago. It was back here in April. There was a late day sell-off, massive sell-off, okay, right into the close. Like literally the bell went off and that sucker dropped like a rock. And there was, they bought put spreads and there was an exercise. So if you bought, like in this case in the XSP, or let's just use this, if you bought in today's marketplace, okay, the 678 puts, okay, if you buy, okay, the 678 puts, okay, and we drop like a rock right into the expiration. Those 678 puts, when do they expire? They expire today. This is, okay, 0-DTE. So if you bought these in the spiders and we dropped quickly, the option clearing corp will come over, okay, and it'll exercise your right to do what? Well, you bought the 678 puts. I'll get that one right. Probably. Steve, give me the more coffee. It's Monday. Somebody has a case of the Mondays. Give me more coffee. I was out partying at the Apple store really late last night. Not like I was watching football. The hell was there to watch in football yesterday? It was an embarrassment for a football kind of a day. The only game that was good was over, I think, in Germany. I think it was in Germany. And the game was like 7:30 in the morning. It started. It was the only good game. Everything else, I guess it was kind of good because I watched Aaron Rodgers get his ass kicked up and down the field. That was good. Nobody likes him. Not even you Green Bay fans like him anymore. It's okay. Anyway, clients went out, okay? And are we having fun yet? Okay. It was like dead silent here. They're like, he's losing his mind on a Monday. Just wait until like we get to like Thursday or Friday. It's going to get much, much better. Are we having like cutting in and cutting out problems again? Okay. I'm actually gonna make a note and I want to talk to the developers. Is anybody else cutting in, cutting out? Seriously, because okay, sounds fine there. Okay. Because I saw problems the other day too. And I'm waiting. Okay. I'm just waiting to developers are probably listening right now. Okay. Yeah, I'm coming for you. For you. Anyway, this is a 0-DTE. It expires today. 678 puts. The market drops. This is back in April, and some of you guys got caught by it, and it dropped fast. So the option clearing corp, which is known as the OCC, comes through, and anything that's in the money by 1 penny, okay, or more. So if you were even a penny below 678, okay, even a penny below 678, they will do what? Automatically exercise your right, okay? But you're like, but I bought puts. Yes, they're going to exercise your right to do what? Puts. So the right to do what? To sell. So they're going to exercise your right to sell. Sell what? Spiders. You go, I don't own any spiders. They go, that sucks for you because then they're going to make you short 100 shares. Okay. So we had some clients that got, they're like, I got assigned. And I'm like, you can't get assigned when you're buying something. You got automatically exercised. And you can put, a do not exercise, a DNE. Nobody does that. Just watch your crap. So instead of trading spiders, and spiders have pretty damn good markets, but I'll trade XSP. So why XSP? So XSP, all right? XSP is what we term cash set. What's set mean? Settlement. Cash settlement. What happens in a cash settlement? There's no underlying. The SPX and XSP. Do you know what this is? Okay. It's the mini version of the SPX. Okay. You're like, oh, I feel special in there. Like, don't be afraid of the spiders. But on zero DTE, maybe you fall asleep at the wheel. Maybe Trump comes out and tweets with a minute or two to go to the close. Okay. Because I'm going to tell you something. Okay. I'll explain you something. Some of these options, including some of the major ETFs, are open 15 minutes after the close. So the bell goes off and the spider options still move and the XSP options still move and the SPX options still move. So we had some clients that got beaten up a little bit in a trade, yada, yada, yada. It was one, okay, 1 billion. That is a Seinfeld reference. Okay, it's a Seinfeld reference to the very famous "Who Silly Jerry," where it ended up in places. Okay, not good. Now that I've explained that this is a cash settled instrument, how does the cash settlement instrument work? Okay, it works by, instead of settling to stock or an ETF, there is no stock. See, not tradable. What's tradable? Just the options. So what you have here is a pure cash settled instrument. So I immediately this morning, okay, out of the gate, took a bearish position. Did I take a bearish position because I saw big bearish things going on the screen? No, on the contrary. I took a bearish position, okay, because I think it has excellent risk reward. And I'll do that from time and again and again and again, okay? I'd rather, in most instances, okay, I'd rather take the bearish position. Why would I rather take a bearish position? Because the trade is always cheaper on the bearish side, okay, because of implied volatility skew. So the trade is always going to be cheaper. If I look at like implied vol, I'm buying, in this case, a 17.5 vol and selling a 23 vol. That, it's so funny because it doesn't sound like a lot to people, but you're buying basically like an 18% vol and you're selling, okay, a 23.5 vol. That's absolutely huge, huge. Because if I bought an at the money call spread, just a looky for a second. I bought an at the money call spread, okay, $5 wide spread, not even worth even selling. Not even worth selling these calls against it. An absolute slop fest out there, okay? Most of the time, the call spread's going to cost me a lot more, but this one's out of the money, okay, by about 60 cents. But anyway, the point being is most of the time, the skew is very favorable for put spreads. So what if this put spread, what if we rally and the put spread doesn't make money? You lose $100, okay? That's it, okay? What if we rally and the put spread loses money? So you lose money and you come back in the next day, okay? And and you can complain to me. So it's okay. You can come in and you say, you sucked yesterday, but then you're going to have to get right back on the pony, okay? And do it again and do it again and again, okay? That works. What's tomorrow? Is tomorrow Tuesday? I'm not going to answer that yet. Okay. Just watching a couple things. Interesting. Okay. So as I go through here, sorry, I'm all distracted. I'm reading incoming emails and so forth. Okay. Very busy day. Apparently, Cal Tours is the only one with a technical issue today. You know what we call that? We call that your issue. Okay. Markets are open tomorrow. It is Veterans Day. Markets are open tomorrow. The bond market, I believe, is closed. So it is a banking holiday. Imagine that, bankers not working. Okay, it's a banking holiday, but the markets are open. How do you know? Okay, well, look, there's a November 11th, option in here, which means it's open. So if you would take a look, let's go to TLT really quick. Oh, TLT only has Monday, Wednesday, Friday. Never mind. All right. So in XSP, sometimes I'll put on trades and I'll just cite risk reward. It's a really, really simple idea. Okay. It's a simple idea with some very deep mathematical, reasoning behind it. The simple idea, okay, is that was a really bad distribution curve. Okay. Here's the marketplace and it's trading like right at, 680, and you can go higher and you can go lower, but forget actually where we're trading today, just to make a quick point. Okay. The marketplace right now is at, let's put 681. Okay. It's already made a dramatic move above and beyond any standard deviation. I mean, like a one standard deviation move was over here. How do I know that? Because I had the daily expected move as 56 bucks. 56 bucks translates to a $5 move higher in XSP, right? So, $5.60 move higher in here. It's already up $8. So if you look at this from a standard deviation, okay, this move over here would have only taken us, okay, about $5.60 higher. We're not $5.60 higher, okay? We're $8.17 higher. So we're already well outside the standard deviation. Now, could we get to 2 standard deviations? Yeah, you could. But the marketplace at that point would be up, 110, like 110, which is, in this case, like it's a massive move. It's like an $11 move up, okay, in XSP. And I'm making this like kind of rationalization to you, but if you look at like a 1 standard deviation move, let's portray it this way. If you look at a 1 standard deviation move, okay, call this like 1 sigma, 1 standard deviation. That's supposed to encompass, 68.3. You go to 2 standard deviation move, okay, getting a 95% confidence level, and obviously a 3 standard deviation move. So to come out to 2 standard deviations, okay, it's not that it can't happen. Of course it can happen. Like how, of course it can happen. Like it happens, I wouldn't say all the time, but it definitely happens. But right now, okay, we're already up here. And I look at a risk reward and say, what's the probability getting up here versus reverting back? Okay. And the probability, okay, of reversion back, it's not necessarily that high. We could stay flat. We could definitely close the day right up here, 76 points. But getting all the way to a 2 standard deviation move, okay, is very, very limited. It gives your trade. The edge in the trade, okay, is basically saying like, it's not about just reversion tactics. The edge in the trade, okay, is mathematically speaking, okay, it provides you excellent risk reward. Like I'm going to put it another way. And I like actually doing it this way. In fact, when I do this trade and I'm not live, okay, when I do this trade today, literally, okay, and people think I'm nuts, I'll just go out and short a bunch of futures contracts. If I'm doing this reversion trade right now, I'm just going to short S&P contracts. And you go, are you out of your mind? Well, you're just going to short S&P contracts? Sure, why the hell not? Okay, or you could short spiders. So right here, I would just take a short position and go, why aren't you trading options? Because I like the pure risk reward. I would short the marketplace and I would literally do what I term a risk one to make one. Okay, that was a really bad make. Risk one to make one. But why would you risk one to be able to make one? Because the upside potential at this point, although prevalent, okay, is not nearly as large as some of the downside risk. So on that short, okay, in this example, can the marketplace go up another 20 points? Sure it can. Market can go up 20. Can the market go down 20? Absolutely can go down 20. Okay. But from a risk reward standpoint, okay, the short pays off more often because going up another 20, you do realize the S&Ps would have to be up over 100 at that point. That could happen. Okay. Maybe a vote passes, at some point in the day, the marketplace, feels its little Wheaties and heads up over here. but the chances of us going down 20, okay, way outweigh the probability of going up 20. You only have to look at the number of days where the marketplace actually finished up 100 is extraordinarily limited versus the number of days that it closed, okay, well below even 75. I'm using, okay, a lot, some regression tactics in here, okay, but really it's just risk reward. And I'm just showing you in a couple of different mediums, like how I'm actually trading it. And again, I'm not trying to sell anybody on the idea like, oh, you need to do the XSP trade. I don't know a damn thing about the XSP trade working. Okay. I'm not telling you it is going to work. Okay. On the contrary, I'm telling you though, if I come in and I do that trade, okay, 3 or 4 times, one of them I'll make the full $5 on. That's it. Okay. And then that makes it, okay, worthwhile. Like if you can make money, even 1 out of 3 times in this trade, it's wildly profitable. I just risked $1 to be able to make 4. So you figure out real quick. Okay. And if we reversed massively, you'd be like, oh, you shouldn't have done the spread. Okay. I wanted to do the spread. The reason I used a spread today is because I noticed even today's implied volatility was a little high early on, when I traded into this thing. So it is what it is. Okay. And I like it. Okay. Now, the advanced decline line, I've pointed out in chat, keeps dropping. Yeah, but nobody gives a damn. Nobody, not gonna work here anymore. Okay. I'm honestly today, I'm not all bared up with no place to go. Okay. I'm not. Nvidia. Okay. Let's look at Nvidia. As I said to you, the order flow in here it wasn't catastrophically large. Okay. Very large. It's not like massive. There's definitely some call buying going on. Okay. It's picking up out there. It's 2 times the norm at this portion of the day. Take a look at Meta. Nobody's wanted to buy this piece of crap for weeks, right? Literally. Like I'm not, making that up. No one's wanted to buy this piece of crap, okay, for weeks. What's weeks? Well, since its last earnings period when the thing got crushed. Meta, though, is going to make for a very interesting trade idea if Meta gets a little bit more of a bid under it. Who wouldn't want to short it right in this neighborhood here at 660? I would. Okay. I would short it at that point because I think it's a pile of crap. Okay. A big flaming pile of crap. Tell me how you really feel. Did I mention the crap? Okay. All right. Continuing on. By the way, somebody was asking, I will not shoot that trade out. I will not shoot the trade out. That's an intraday trade. Okay. And I choose for the easy argument here is you show up, okay, and you actually spend time with us and you actually learn the stuff. Okay. For those of you that are in here, I feed you. I feed you trades I do not send out. The trades that I send out, by the way, the XLF now is going negative on the day. The trades I send out, okay, are slow, very simplistic, okay. It's a different genre. When you're trading something like the XSP, there's no way in hell I would send that trade out. And the reason I would never send the trade out in the XSP, okay, as I told you, it's maybe got like a 1 in 3 chance. So why would I want to send that out? Because then I got to let people, your track record sucks. Okay. But now you actually have an understanding of why the track record. I like to do trades that are low probability, high payout. Okay. I like to do that. I do SPX butterflies, and SPX butterflies are very low probability, high payout. Okay. It just kind of, it does it for me. And there's a lot of strategies that I do like that, where I like to take shots. Okay. And sometimes I do shots that are some big shots in the marketplace. Just looking around. Look at this. It's all tech all the time. Okay. It's not financials. Energy's actually off by 1% because the government's reopening. And then Walmart. Okay. Walmart. Again, this is the one that really kills me right now. I'm actually surprised that BABA has reversed. BABA was actually up quite readily this morning. Okay. Starbucks now is down $1. Come on. The government's reopening. Okay. Does Starbucks take snap cards? And I'm not joking. I really don't know. Okay. I would assume they do not, as this can be construed as a luxury item. Okay. But at the same time, I'm sure you can use like your snap card, like, and get coffee like in Walmart and crap like that. Okay. Really crappy coffee. Walmart probably has pretty good coffee. Okay. Anyway, this is an in-out spread. Okay. It's basically flat into here. Okay. All right. So the track record this year, man, this year we've actually made money on the posted butterflies. Okay, we've made money on butterflies for sure, but there's a few of them that I did that were definitely not posted. I did some intraday butterflies too. Okay, I killed it early this year in SPX butterflies. Okay, absolutely killed it. Um, the XLF is backing off enough that this could start to impede a little bit. Go to Quantix. Okay. Ticks have actually off a little bit. So you have a marketplace where it's worth looking right now at major sectors. Home builders are down. Jets are basically flat. Now here's another one where I'm kind of surprised. Okay. You would think that Jets is an ETF for airlines. I actually just went to the bottom of my screen and went to the ETFs because I wanted to look specifically at Jets Airlines. Okay. Air traffic control is probably going to reopen. They don't give a damn. Okay. Meanwhile, healthcare. Okay. Healthcare is going bankrupt and yet it rallies. I don't know if it's going bankrupt, but they're not included in the bill, at least to my knowledge at this point. Okay. That could have, I'm sure that could have actually changed a little bit though. Apologize. I'm opening up a room on the other side so I can actually see any news blurbs over here. And they're talking about the House right now. Anyway, I'm kind of surprised that healthcare is actually up. UNH, United Healthcare people, okay, this thing is basically flat now on the trading session. So yeah, your marketplace has absolutely nothing to do with anything other than an AI rally today. XLI, so XLI is the industrials, okay, a little bit off today. Obviously, XAU is flat, okay. Your semis, okay. I have an interesting story on semiconductors. I'll save that for a moment. XLP, which is consumer staples. This is one that I would have thought would have had a big bid under it. It is not moving at all. Nothing else is moving, not retail, not materials. Okay. You have XLK, okay, and SMH that are ruling the roost in here. Everything else, by the way, XLY is not really discretionary. XLY is Amazon plus Tesla. So it's actually up today because of that. So from a sector standpoint, okay, everything sucks but tech today. Healthcare coming back on, which is shocking. It's not like wildly strong. It's up 0.77%. I'm not going to say it sucks though, but everything today is a slop fest other than big tech. So apparently big tech is the only beneficiary of the government reopening in here, which brings up Palantir. This thing I knew would be ripping. Okay, so Palantir with a huge bid back under it. Speaking of Palantir, I was talking about this last week. I'm like, Alex Karp looks like a crazy person. So I did listen to an interview with him over the weekend. Okay, he might be a crazy person, but the man actually makes some excellent points. If you miss some of his political points, okay, he's quite humorous to listen to as well. I like it. All right. Let's also dig back to volatility for a second before I dig into some trades, because I am looking at a couple things. Volatility right at lows of session, okay? And VVIX. VVIX is back under 100. I would take it. So I glanced at it a moment ago. Oh, wow. Interestingly enough, VVIX is only at 100, okay? So this is not completely cooled off yet, but it could take some time to relinquish some of the hedges out there. Also notable, okay, but no surprise whatsoever, gold is back in the bid. This has to just do with government spending, I would think, okay, because the US dollar, I'm sorry that there's just no movement in it today, okay? You know, the dollar sold off, reverted back up. Gold is, it's like kind of its own animal today. It is off the highs, but pretty damn close to it. It's a huge bid back onto the marketplace. Take a look at GLD for a moment. And GLD, the reason I'm bringing it up, I love what I term bounce and fade trades. Okay. We're going to let GLD run for like a day or two, but look, there's some huge sell side activity appears in gold. Lower edge of the expected move, hit, check that box. Lower edge of the expected move, hit, check that box. Look at the reversion back up over here. Okay. It's big league, very, very big league. And I'm going to zoom in a little bit more. Okay. I'll tell you, if this thing continues a little bit to the upside, it's another opportunity for the possibility of a short. But gold has been very, very difficult to short. Okay. And the reason that gold is so difficult to short is it has an inverted implied volatility skew. I will read into this a little bit more deeply when I'm not necessarily live right now. Okay. But gold is not, it's not a short for me yet. Okay. But it's definitely working to those means. Like that's the kind of trade I would actually look for a short. Now, let me actually bring up a couple of notes. Okay, getting to work over here. Getting to work. Okay. Expected move for the week, 123 bucks. I already shared the link. The link is in the chat. Okay, it's right down below. So you have $100, okay, and $23 of movement for trade for the week, which is big because the week before, okay, this week before this was 106. Here we are at 123. And why it's interesting, yes, the market sold off, but we rebounded substantially. Like last week, okay, we were facing a full 2 standard deviation move. We reverted right back up, okay? And I do want to show this because I constantly want to reiterate and remind you how freaking important expected move happens to be, okay? You want to gloss over it, fine, you do your own thing, okay? We came, okay, ripping below that expected move. We called it to the point of when the marketplace would actually break down. And I told you, even if we rally back up, you're going to rally right back to it. That to it, okay, was 67.35. And we literally missed it, okay, by a couple of pennies. A $6,700 product, okay? And we closed within a hair of the lower edge of the expected move. I should have had a butterfly on that one. Holy crap, I would have killed it. I could have been somebody. I couldn't get a butterfly on because we dropped so quickly. But like literally, I talked about it, okay, on Wednesday night's video. The highest probability was going to 67.35. On Thursday, we talked about specific levels and breaking down in the market. It's 67.15. We did break down. We reverted back up on news and reverted right back to it. Okay. Now hopefully you're paying attention. This week, okay, has this $123 movement kind of priced in. So $123 move that's actually priced in. That means you go $123 higher, $123 lower. Okay. Get comfortable with where these are. That is right around 68.50. Okay. To the upside, 68.50. To the downside, okay, just put it right at about 6,600. I know it's a hop, skip, and a jump north of that. Okay. It's a pretty expansive move for the week. Meanwhile, we're already up 76 bucks on the week. Okay. Things have already kind of mellowed out though. So are we hitting the upper edge of the expected move today? 123 points is unlikely. Okay. But as I said, you are more than halfway home. If this week you wanted to place a butterfly, specifically if you wanted to place a put butterfly, the call butterfly is done, right? You're only a few points away from that. If you wanted to place a put butterfly thinking risk is going to come back in, okay, the butterfly would literally be placed at 66.05 and it would be dirt cheap right now. The butterfly that I'm referencing would be for the 14th, okay? Probably going to have to open up like 100 strikes here, okay? So 66.05. I'm going to see how big of a butterfly I can build. Look at that. It's a big boy. It's $20 wide butterfly for like 30 bucks. Okay. I don't think I'm going to send this one out though. I think I'm just going to do it in chat. That's why somebody was saying, oh, well, the butterflies. Okay. Sometimes I just do these in chat because this one is a flyer. Like it's literally a high flyer. It got filled. Okay. I've decided I'm not going to send this one out. So that's the trade. I just did it for 20 cents. I'm actually going to put another one together in here. See, I'm going to work 20 cents. And I'll work another one, create a duplicate order. I'll put another one at 25. 25 cents for a $20 wide butterfly. Okay. It's awesome. That's awesome. So you go like, why would you do that? Why would I risk? Why would I risk? Okay. Because we could actually revert back down to the week. It's not about being bearish. It's just playing odds in here. That's it. Okay. We've all seen us move to the upper edge of the expected move. And, like a week like this, we moved up, we dropped. Actually, that was the last butterfly we hit. Okay. We've moved up, we've dropped. Crap happens. There's even a week in here recently, I think, where you hit the upper and lower edge of the expected move in 1 week. Okay. There it is. There's the lower, and basically there's the upper. Okay. It can get wild out there. It can be turned into Mr. Toad's wild ride. Look at this one. Halfway home to the upper. Okay. Right before the precipitous break lower. I don't know if we're going to break lower. Okay. But given it's like really early in the week, and I was just able to buy a $20 wide butterfly for 25 cents. I'll do that. Okay. And again, people get upset then. I didn't send it out. Okay. Show up. Okay. Show up. I'm not going to send out every trade. Especially this stuff, because this is super low probability. That's a super low probability trade. And I don't mind saying that, right? And you can watch, even though it's super low probability, watch the volume start to jump in here. Okay. And there's times where I will trade these substantially. You do one nice size butterfly, you only need one or two to hit in the whole damn year. Okay. That's it. One or two to hit in the whole damn year. And that works. I'm still working one at 20 cents. We'll see if that one actually pays out. Okay. And this doesn't have to do with my, again, I'm not all bared up with no place to go. I'll trade another one here. Okay. I'm not all bared up. Now they won't even fill me at 25 cents. Okay. You bastards. Oh, there we go. Fill another one. Okay. Yeah, I like it. I'm just filling flies. Okay. Filling flies. Who likes his fly? Okay. It's weird. I'm only down like $4,000 today with a 1% rally. That's weird because I have some big positions on. So the marketplace, and my big positions though are not shorting tech. Okay. I'm not ready to be like throwing the towel in yet on tech, but I've got energy stuff on. I've definitely got some XLF stuff on. Okay. But it's very interesting to see a couple of major, sectors that are just completely uninvolved. Like I'm even going to say some of the guys here at TheoTrade, like I'm sick of hearing about the government reopening. It's a government reopening rally. You can say that. It's fine. Okay. But it's just tech that's rallying back after getting the living crap kicked out of it last week. Elon Musk is going to stay at Tesla for at least the next, 10 years, but they didn't rally on that one. Didn't anybody think, and I'm kind of curious, didn't anybody think we were going to rally on Tesla when his pay package passed? And it didn't just pass, it passed with flying colors. Like the vote was incredible for the $1 trillion pay package. Can I ask you guys, okay? Worth it? Not worth it. Come on, put it in chat. Okay, Elon, worth it? Not worth it. I don't want to hear any comments about Elon. I don't give a crap about the politics in there. Is he worth it? Is he not worth it? I'm just curious, like what people actually think about that. The $1 trillion pay package. Okay. Wow, I'm actually really surprised. I'm surprised. No, now it's getting more 50-50. Okay. You guys do realize, like, so for what it's worth, the company has to be worth like $8 trillion for him to get $1 trillion of it. Okay. Like $8 trillion. And I think to myself, could anybody ever, I mean, by the way, I don't think he'll ever get there. I just don't think he'll get there. $8 trillion market cap. So if he gets there, like what a freaking milestone. Nobody should be worth that much. Like I get that portion of it, but I don't really care. at this point, okay, like I don't have any skin in the game either way on this one, but kind of want to see if like he can actually do it. Because if he can, like think about for the shareholders in there. By the way, his personal net worth then wouldn't be 1 trillion. It would be like, again, like 2.5, maybe even 3 trillion. Depends on SpaceX, okay, which they're getting ready. They may have to take SpaceX public. Okay. They'll take SpaceX public and he'll be running a couple of, trillion-dollar behemoths. It's insane out there. Okay. Insane. Okay. The robots are pretty good. By the way, the fingers on the robot, holy crap. Okay. I'm afraid. By the way, if you guys haven't seen the YouTube video of the stupid little robot that they're selling for like 80 grand or whatever it was, um, where the guy actually hands it the machete and like the robot's chasing him with the machete. Okay, that's absolutely one of the funniest things I've actually seen in a long time. So it's a YouTube video floating around. If you haven't seen it, it was great. Okay, because the guy actually gave a robot like the machete and he gets chased by it. Okay, the robot actually smashes through like a mirror in the house, smashes through like a glass door in the house. It's classic crap. Okay, it's everything that you were told the robot would never be able to do, all in one video that the robot absolutely did. But chasing him with the machete did it for me. Also trying to like cook eggs and then slipping on them. Okay, I was dying laughing at that crap. So as were my kids. Anyway, it's not a Black Mirror episode, I swear. It was real, man. Okay, it was real. By the way, there will be when you see the robot and it moving around, you quickly realize like everybody's like, well, they're still going to need people to dig ditches. No, they're not. No, they're not. Just look at the robot. Okay, they're still going to need people to like weld pipes. Yeah, no, they're not. No, they're not. That robot will definitely be able to do that. I mean, we're like almost at that point. If they're talking about it like being a better surgeon than a surgeon, yeah, I don't care if even the surgeon's behind it. I'm in. Okay, I'm in. You got me. Okay, and it's definitely looks a lot like the robot from iRobot. I'm also throwing that one out there too. So yeah, sci-fi's kind of come to life. Unscathed still at all times highs. XLV and UNH, we've been talking about it. I do want to talk about crypto for just a moment, okay? Because I think there's an opportunity in here. So, oh, interesting. It actually backed off already a little bit. So the opportunity in crypto, and I'm going to pull up specifically, okay, BITO here. NASDAQ just broke to highs. I'm going to bring up BITO. And the reason is BITO is because what I'm looking for is trade, obviously, in here. So BITO, okay, crashes and burns, rebounds. Last week, absolutely, okay, horrific week. Even with a rally back, this is like a 2 standard deviation move in BITO. What I was looking for this morning, specifically looking for a hit of the upper edge of the expected move. We're nowhere near it. If crypto rallies, I think it's a great opportunity to get short. I am still very much in the short camp on crypto, specifically Bitcoin. Look, I'm not, so everybody knows, I'm not in any bearish positions right now in crypto. There's blood in the water over here. I see it. Okay. It's not going to come back easily. This is pretty classic sell side activity where it sells, it bids, it sells. It's got to get a little bit more substantiated bid. And then we're going to go for the big one and probably end up down, I would think in the low $90,000 range. And when I actually convert that, BITO is like the only product I can trade actual Bitcoin, but BITO is the only product that's retail friendly that trades enough in options. I can't find anything else that trades anything like a decent amount of options. So this is the kind of trade though, where I might want to go further out in time and just take a gloriously large bearish position way out, looking for a product just to, come apart at the seams. And I'll pull this up and you can see, like, I don't like looking at support and resistance on BITO because BITO has nothing to do necessarily. It's the Bitcoin futures, and there's actually a little bit of drag in this product. But a break, even down to like the 12 range, would be doable. So we might take some shots inside of BITO in the days to come. Just be on the look for that, on the lookout for that one to actually occur. All right. I am going to bring in Jeff Bierman here momentarily. So S&Ps are up 80. I mean, it's not exactly where we started, but we're right where we were when we took that short position a little bit earlier in the day. And look, I don't know anything right now other than volatility's dropped, market's up. It's all about tech. Okay. All tech all the time. What just drove the NASDAQ to highs. Okay. I can tell you what just drove the NASDAQ to highs unequivocally. Okay. Is more call buying in NVIDIA, period. There's no if, and, or but about it. You got NVIDIA. Okay. Meta. Okay. And Google kind of flattened out a little bit. Take a quick glance over at Meta as well. Okay, kind of flattened out a little bit. So that last little bump higher in the market, okay, was exclusively NVIDIA. NVIDIA broke from the 96 level, okay, another dollar higher. And that people, NVIDIA, that's your market. Okay, you want to look any further than that, you go, okay, you go for it. Tesla, okay, a little bit of a bid under it as well. Although the order flow is a little bit more chaotic, a little more sketchy inside of Tesla. Okay, this is NVIDIA's day. Okay, you can see even in Tesla, order flow is barely positive on the call side. NVIDIA, okay. Oh yeah, this is heavy call buying going on in here. Ladies and gentlemen, Jeff Bierman. Da-da-da. Jeff, what do you got? You look like you're freezing over there, man. How much did it snow last night?
Well, they said it was going to snow 10 inches and they were off by about 6, so it snowed about 4 inches.
That sucks. Yeah, I was watching the Bears game and there was actual snow. And holy crap, the Bears. Okay, what is going on in that city? Okay,
They got lucky.
people are winning, man. People
No,
are
come on now.
winning.
Stop, slow down. They're beating crappy teams. Come on.
Yeah. Well, the whole NFL right now is kind of crappy. Hey, but at least they're not gambling like the rest of the sports world, huh? Okay,
Oh,
it's
yeah, just
oh,
slip
it's
that one in there.
oh man, it's brutal out there. Brutal out there. Can you imagine though some of the contracts out there? You're making like 20, $30 million a year and you screw it up over like a $200,000, bet. I just
What's that all about?
it's ridiculous. It's just, like literally like every major league baseball player and football player, from my experience, okay, almost every one of them their manager should hire a person that follows them around, an actual person that follows them around 24/7 and keeps them from doing stupid things, period. Because I lived across the street from a baseball player, okay? He needed that. And he was a bright guy and he still needed that because so many stupid opportunities are presented to you when everybody knows you make $20 million a year and it's published in every major, ESPN and, site has it out there.
Right.
Okay. Even a robot would not stop them. Okay. You need an actual like person to stand by them and go, stupid. Don't do that, stupid. They need that, even for the ones that are sharp. Okay. I mean, you had that kid from San Francisco that got shot in downtown San Francisco. Was he buying a watch or something? Or had just bought a watch? I can't even remember what it was. Okay. He shouldn't have been there in the first place. You don't go to downtown San Francisco. That's stupid. Wear a bulletproof vest. It's downtown San Francisco. Everybody knows that. By the way, I could have used that on the road a little bit myself, like early years on the road. Okay. Traveling around, corporate credit card. I had a good time. I had a really good time. Instead, my guy that stood next to me was Tom Sosnoff. Okay. That did not help. That, if anything, made more degeneracy happen.
Yes.
All right. So you travel a little bit with Tom. Okay. If I had continued traveling, I would have been 350 pounds had I continued to travel with that man. Okay. All we ever did is eat. What do you got for today?
Well, it's the final installment of the impulse indicator, but I was going to talk about the rotations. Don, this is just let's buy tech and let's sell all defensive stocks today. Like there are a couple of defensive stocks today that came out, they raised guidance and the market blew them out. They sold them out. They didn't care.
Yeah. Do you know the advanced decline line has just turned negative with the S&P is up 1%. Okay. Say it ain't so. That's why I said, I wasn't like ripping on the government reopening thing, but if you sit here and try to tell me that this is government reopening kind of rally,
oh, stop it.
It doesn't make sense. It just doesn't make sense to me. Like the Walmart thing really bothers me though, because in all seriousness, okay, you'd be all in on Walmart. Why are they tanking so much? Are people like broke, completely broke? You take a look at like Costco. Costco is right on the edge of a major break. Like, look at this crap. It breaks through 900. It's over, people. This stock could open up for another $150 easily in there. I mean, seriously, like I know people that are broke and okay, you hear it, but it's anecdotal, but it kind of feels like the market seems to know something. But the funny thing is, then if they're broke, okay, who's advertising on Meta? It's because this is just an advertising, crap fest in
Yeah,
here.
it
Yeah.
is.
All right, I'll turn it over to you. Elder Impulse. Hey, ladies and gentlemen, it is Jeff Bierman for the next hour. Jeff, it is all yours.
All right, so let me run with this. Let's see what's going on here. I'm trying to